As I mentioned, medium-term budget policy statement next week, Tuesday, and I'm sure you've already have quite a lot of expectations with regards to what you can expect from the Finance Minister.
Absolutely, Eleni. The first thing is it's pretty clear that our growth outlook for South Africa has weakened. If you remember at the budget speech, the Treasury tabled growth expectation for this year of 3.4%. That doesn't look like it's going to come to pass at this stage. We think that maybe something around 3.1 or 3.2% is more likely. And also, there's been a slight change in the composition of that growth with the most recent data on consumption spending in the domestic economy kind of showing a little bit of weakness. So from that perspective, we may see a little bit of a shortfall on the revenue side of the economy, of the budget balance. So with that in mind, we're looking at probably the deficit just moving out slightly, just a touch. Our expectations probably 5.5%, a little bit better than the market expectation.
So you're looking out predominantly for the growth outlook that will come from this. What other items on the agenda do you think are going to be very pertinent with regards to the next financial year?
What a lot of people in the market will be looking out for is a little bit more detail around the National Health Insurance Scheme and the way the funding mechanism for that will be put together. And as well as, in this year, the economic cluster is really focused on jobs as one of their major priorities. When we saw that in the original budget with 9 billion rand jobs fund, as well as the special tax relief for employment of youth. A little bit more in that regard may be forthcoming.
Do you think we're going to see anything significant with regards to the tax relief for the youth fund that you're talking of, and of course on the jobs front as well? It is something that is always implemented in the budget and the medium-term budget policy statement, but some would say not nearly big enough to tackle the unemployment scenario that we're faced with.
You make a good point, Eleni. With unemployment at 25.7% and no real impetus in the job market, there seems to be a little bit more, to me, to be a little bit more needed to be done. Again, remember that normally drastic tax relief measures are tabled in the main budget speech. This one is normally a little bit of an update as to the state of the economy and a little bit of changes with regard to underlying assumptions. So we don't expect necessarily something that drastic to be tabled here, but they could signal that their thinking is that way for February next year.
With regards to any kind of policy change when it comes to the local currency, because we've seen intervention and the accumulation of reserves to try and ensure that we don't see too much strength, and then we start seeing the local currency coming under significant pressure, and then interesting rhetoric suddenly coming through and saying that we could actually see assistance on the top and the downside as well. Do you think this is going to be on the cards? Do you think we're going to hear some kind of rhetoric with regards to the FX market?
In terms of the FX market, the bottom line is you've got to realize that South Africa's foreign exchange is actually very small in the global context. In terms of the global context of reserves. So for us to intervene to try and manage the currency is really bashing your head against a brick wall to a certain degree.
In a sense, we're seeing counter-cyclical fiscal policy that is occurring right now. We've got inflation very close to the upper end of the target band. We've got interest rates at 30-year lows. Do you think we're going to start being more inclusive with regards to the growth agenda in the country and putting aside the inflation targets?
I wouldn't say that the inflation target is under serious threat. Remember, in the last few meetings, every time we come around to this budget time of the year, people start talking about putting aside the inflation target. I think, firstly, the SARB has defined quite a lot of credibility around the inflation target, and that has long-term benefits for South Africa. But at the same time, lower interest rates and higher inflation are not necessarily a panacea for all the structural ills in the South African economy.
With regards to the National Health Insurance, and you touched on that a little earlier, are we in a position to commit ourselves to such a massive expenditure that is going to perhaps hurt us down the line if we do not embark on this correctly and we don't see an increase in revenues into the country and then embark on a very expensive exercise such as health?
It's a very difficult one, Eleni, because clearly if you look at lots of studies of global competitiveness, South Africa's lack of public health competency is one of the major drawbacks of our holding back our competitiveness. But at the same time, the fact that we have such a narrow tax base really indicates that further burdening of that base with costs is not something that's necessarily a good thing.
I was speaking with Wayne McCurry from Momentum Asset Management, and he was talking of the construction industry and the fact that we've actually been hearing for over a year now the amount of money that government is going to spend. Any news on that front that you're expecting that could help prop up the overall sentiment towards construction? Remember
that over the medium-term expenditure framework, the government had committed to spend 811 billion rand. We haven't seen that come through to a massive degree. We have seen some expenditure, but I mean, in a general sense, it looks like with the economy looking a little bit weaker and private consumption demand actually slowing, that there could be a place for some targeted fiscal stimulus there.
Rand ranges for next week. I'm sure it must be a tough one. What is your sentiment?
It really is. But in terms of what our belief is, it looks like the market has priced in a lot of optimism around the European sovereign debt scenario. We don't see it as that optimistic. Even if the French or the German plans are actually pushed through, there's some massive problems around those, even in the implementation phase with the technicalities of them. So from that perspective, we looking at risk aversion really coming to the fore some more, and that really implies a weaker rand.